right when we thought there's going to be no more Celsius distributions in 2024, they came out and just distributed a little bit more Bitcoin. So overall, about 2.53% of your total claim was just distributed on December 6th, 2024 for most people. And so we're here to talk about that today, talk about the tax implications, how it might be a little bit different than what we had previously released. And the primary reason for that is most people thought it was going to be paid out in cash. This was from the sale of illiquid assets. And so most people thought they would just be sending cash, but instead they're actually sending Bitcoin. So there's going to be some extra nuances here. We'll review our calculation that we did before and then go over how it might be a little bit different. If you haven't seen our last video to how we got here on the example one in the Celsius article on Koinly, definitely go check that out. It's linked below. And this is pretty much just, we're going to continue off of that now that we have this extra distribution here in 2024. Again, if you don't know what this is, go watch that last video, get yourself caught up, and then come back to this one. So basically, where we left off was that we had calculated the loss on the stock that was received, and then this new Bitcoin and new Ethereum, we had determined the cost basis that was being returned, and then we were left with the cost basis that we had determined we needed to allocate to the illiquid asset recovery category and then the likely unrecoverable category. So the question here comes down to, we just got a new distribution. It's about 2.53%. And we need to allocate some of this cost basis, but not all of it, to this distribution. So this category ultimately was going to make up 6.4% of your claim. And as we know, we just got back 2.53%, so not that full 6.4%, which comes out to 39.5% of the illiquid asset recovery category. So that means what we need to do is we need to take this amount and multiply it by 8132 in order to determine how much cost basis we need to allocate to the illiquid asset recovery or the distribution that we just received. So this is the amount, 39.5%, that we just got back in this new distribution. 39.5% of the illiquid asset recovery, which overall will be 6.4% of your claim. And so the question here is, we need to allocate cost basis, the number that we determined right here, using this percentage. So all we have to do is calculate or multiply 39.5 times 8,132, or what we had calculated here. And for this example, that comes out to be 3214.68. Okay, so what that means is this is the cost basis that we will use when determining our gain or loss on the additional distribution that we just received. But like I said, there are some nuances that will be introduced. We can get into that later, but for now, this is how much cost basis we need to allocate to that additional distribution that we just received. So before we move on, I wanted to show you how to calculate the fair value of the distribution. I mean, it should be pretty easy, but essentially, you're going to receive some amount of Bitcoin and there's an effective date price. But another way to think about it is we know you're receiving about 2.53% of your claim value. And so we knew the claim value from before was 84,801 about. So you can take 2.53% of that and multiply it by the claim, and that's the fair value of what you're receiving. Another way to do that would be to take the actual amount of Bitcoin you received and multiply that by the effective price at the time of that distribution, which was like 95,000 something, some change at that time. And so that is how you determine the fair value of the distribution that was received. And so going back here, we had calculated the cost basis that we needed to allocate. So this illiquid asset recovery category overall is going to make up 6.4% of your claim value. So that's what we're expected to get paid, 6.4% of this number from the illiquid asset recovery. I showed you how to splice up the cost basis that we had previously calculated for this category. And so this is what cost basis we are assigning to this first distribution. So there's going to be potentially more. We don't know how many more. There could be just one more. There could be 2, 3. We don't know. But this is the first distribution from this category, and this is how much cost basis we need to allocate to it. And so we take the fair value that we just calculated down here, we take the cost basis, and this is how you determine your gain or loss. So here we are left with the remaining loss. The cost basis was higher, so 3,200 minus 2145. This equals our remaining loss that we recognize on this distribution. Now I did mention earlier that there is some nuance here because this isn't being paid out in cash. This is actually being paid out in Bitcoin. So initially, a lot of people were under the assumption that since these funds are coming from the sale of these illiquid assets, they're just going to pay people out in cash, but that's not what's happening. They're paying people out in Bitcoin. And so because of that, the returned Bitcoin and Ethereum could change, right? So this whole calculation could be reworked if you want to carry over the cost basis from the Bitcoin you had lost to the Bitcoin that's being received. And so this would be advantageous for people that had a really, really low cost basis on Bitcoin. Like really low cost basis on Bitcoin, you don't want to recognize that gain, you want to defer it. And so you would probably want to treat this distribution like we treated these other ones where we carry over that cost basis. But since this is a pretty small amount, for many people that want to simplify their tax reporting, you could just treat this where you recognize the gain or loss at the time that the distribution is made, almost like it was paid out in cash. And so the holding period and the cost basis would reset as of that distribution time. Even though it was still a like-kind distribution, you can just treat it as though it was a forced liquidation and you now have that recognized gain or loss. So again, that what we just laid out here is under that assumption. If you wanted to carry over the cost basis like we did here, you would have to basically restart this whole calculation. And then if in the future they continue to pay out in Bitcoin, all of these numbers would change. And so you would potentially have to amend 2024. So again, that can be pretty complicated. And so for most people, since it's such a small amount, it generally makes sense to just probably treat it like this, where you recognize a gain or loss on this distribution, even though it's still a like-kind distribution. And that's it for the additional distribution received at the end of 2024. If you guys want help with this, we are more than happy to help you. We actually also have a course if you're looking for a more affordable option, where we go over exactly how to do this calculation in depth for many different scenarios. We show you how to use it in Excel, how to do the calculation, and then we also show you how to apply it in Koinly. Koinly is the software that we use. We use many different tax softwares, but Koinly we find is one of the best. And so that's the one that we use, and this course will go over exactly how to figure out your cost basis, calculate the loss in Excel, and then how to apply it in Koinly. So if you want to do that, we'll link that below. If you want to help full service, we are happy to help you. Contact us today, book a call. That link will also be below. Thank you so much.